Yeah, hello and welcome to another update video about Natgas. So the new trading week starts green, starts positive. We first want to take a look at the spot chart briefly, and then we take a look at Natgas futures. Spot still the same scenario where we are saying we haven't broken, the imminent upside setup, so it's still technically possible, as I have still labeled it on the futures chart as well, that we're dealing here with a 1-2 setup and a rally in a 3-4-5 off wave C of a larger wave 4. Yeah, so the idea is still, but we need to hold that Friday low. Absolutely, we need to hold that Friday low at 191, 192, as I said in no, not yesterday's video, but I think it was Saturday's video, I think. So this is certainly possible still. And as long as 192 is holding, this could be the roadmap we're following. Yeah, in a C wave to the upside of wave 4. You remember that we talked about and have been talking about extensively about this particular setup here, flat pattern, where the C wave could send us a bit higher, but eventually we're still looking for one more low on the Natgas chart. This particular scenario of a 1-2 setup in wave C of wave 4, which would lead to another low later, is valid as long as we're holding the Friday low. If we break below that, I think we're going to take out that setup anyway. It will invalidate it. And then what would happen then? Well, yesterday I showed you the bearish count. This would then clearly be in control. So the bearish count is this one, where we're saying of this this sort of March high was actually the wave 4 high. I currently don't want to say I don't believe it, but it's not my primary, because if the March high was the wave 4, it would have been an unusually short wave 4, unusually shallow. So I'd rather like to see a more healthy wave 4 in a so-called flat pattern. But again, this could be if we take out that previous low here, the Friday low, then we are following the yellow count with the wave 1 to the downside, here possibly the wave 2 done, and we could now be in the third wave to the downside. I showed you that in the Saturday video, so that we don't get that C wave anymore. Very, very important. So that's the spot chart. Here very clearly the threshold or the pivot that divides between a rally to at least, I would say, $3.20 in this C wave rally, and new lows. That level is the 192 level. For now we're holding it. Phenomenal reward to risk ratio, but it already came down quite a bit too much. Well, actually too much, in this pullback here to consider this a 1-2 setup. Still valid, possible, but it nearly invalidated it, and that reduces a little bit the reliability, but the setup is still valid to the upside. Natgas, similar story here. Actually, it's a bit different, because if we look at that at least short-term bullish setup, which is the same context, same situation, that we say as long as we're holding that $2 level, we can look at higher here in a 5-wave move off wave C. But really it is valid only as long as we're holding that, also here, that Friday low. Here, interestingly, it reacted exactly at the 78.6 retracement. So again, we always want to avoid a sustained break below the 78.6 retracement. That break hasn't happened, so turned around exactly where we wanted it in the orange support area, and it's already trying to reverse out of it. But it's not clear yet. It's not enough evidence that we have bottomed here, but certainly we came into the trend reversal area. We are reversing for now. Just need to see how sustainable it is. So it's a bit of a wait and see. Initial indication that we have bottomed here would really be that we get a sustained breakout out of the trend reversal area here. So we would need to hold above 218. We're doing that now, but it's still very, very early days. And then we want to get a break above this swing high here, which is at 238. And then very important would be a break above 253, but that is quite far away now. And also here on the futures chart, we wanted to go to at least 320. So good reward to risk ratio as always in these trend reversal areas. If we break Friday's low, then it would be the same count. Well, the bearish count would be the same count as on the spot chart. So that basically of this March high, we came down in a wave 1. This here was a wave 2, and we would be following through now to the downside. But again, as long as we're holding Friday's low, the focus could be on higher here, or at least exploring the option that we are heading higher. Yeah? This is here on the futures chart, still a decent 1-2 setup. Didn't break the 78.6 retracement, came down quite low, yes, but it didn't break it. On the spot chart it did, which costed a little bit of reliability, but it didn't invalidate the pattern. In Elliott wave, you really only invalidate a 1-2 setup if the wave 2 retraces more than 100% of the wave 1. But we normally don't want to wait that long, and therefore I typically say that below the 78.6 retracement, if it doesn't stop there and turn around, or at least if we can avoid a sustained break below that level, it's okay. But if price breaks and sustains below it, normally that pattern is not going to work out. Now, funny enough, on the Natgas chart here, spot, it didn't sustain, yeah, broke but recovered quite quickly. So it could be quite a friendly week for Natgas. Would be nice to see finally that C wave rally, but I'm still skeptical, right? I'm still skeptical. Again, I highlighted to you in the Saturday video what are the confirmation levels in Elliott wave to really understand that we have bottomed. So far, we've really only seen one of them, maybe two, but the third one is still missing. Check out my last video for some further clarification. But for now, things looking okay. I'll keep an eye on that for you. I'll keep you updated anyway. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.